Welcome back. In this video, I'm going to be covering Elevance Health. This is a health insurance payer that competes with United Healthcare and other insurance carriers that pay benefits basically to people that either pay for individual plans or through their employer get healthcare insurance to take care of their hospital bills and their doctor's bills. This is a solid company. They've been around for a long time and have been operating very well for the last 5 years. I would like to do my analysis on Elevance Health after their earnings were announced last week. I have a fresh set of financial statements to take a look at and update my analysis to determine what the value of the company is. I'll make a decision whether I should buy, hold, or sell this particular stock, and I'll share that with you. Do me a favor and like my video and subscribe to my channel. That helps my channel out, and I'd appreciate that. Also, do me a big favor and provide comments. I'd love to hear what you think of Elevance Health, whether you think it's a good company to invest in, what you think the value is, and any other investing ideas that you have. Now, let's get into my process and evaluate Elevance Health. I like to follow a process that I've created for myself, a process that I believe in, and it involves 4 questions followed by a decision to buy, hold, or sell a stock. The first question is, do I want to be a part owner in the company? Do I want to be in the industry? Do I think the company is operated well, meaning the management team is doing a good job? Is debt less than 3 times EBITDA? Therefore, the company has a healthy balance sheet. And I want to discount the stock. I'm a believer that you make money on a stock when you buy it. When you buy it at a discount, your chances of making money are that much higher. So I want a discount on my stock. So Elevance Health has been around for a long time, and they're a stable company. They've been consistently growing over the last 5 years, which is very good. Their top line. They've been profitable, generating free cash flow. I really like that combination. They're also in the healthcare industry, which tends to be a stable a sector. And especially as we head into a recession, healthcare might be a good place to put some money in. So overall, I like the company that they've been operated really well. They've been performing really well. They've been buying back shares. And the industry I like as well, especially as we consider the recession that is coming. Now, let me go over the earnings release that Elevance Health released on October 18th. I'm going to go through and kind of share with you how I evaluate the earnings report and what things I focus on. And to begin with, I think that the preamble on the earnings statement, I don't always take all of it, at face value. And the reason for it is a company will tend to really promote all the things that are going right and hide all the things that are going wrong. I like to gather my information straight from the financial statements. That way it's very clear. They have to follow rules. You have to report a particular way, and it has to be that way, or, the CFO gets in trouble, and a lot of trouble. And the company, if they don't report right and they're found out by the SEC, the stock will tumble. They never want that to happen. So the financial statements are always the gold standard of where to get financial data. But there's a couple pieces of information in the earnings release that I'd like to point out. So I'm going to scroll down and pass all this, highlight and glory that the company wants to promote, and get down to where I think there is some good comments. First, the company is doing share repurchases, and the company has consistently been doing that year over year. This company, just so that it's treated fairly, I guess, is they pay a small dividend, just over 1%, but they buy back shares. So I think if you combine the two, it's probably a 2 to 3% dividend payer, but they just do it in kind of a combination of methods to return that capital back to investors. And that's really the extent that I wanted to point out on the earnings report. I did read it all, but I tend to really zero in on the financial statements, and I'm going to get to the financial statements next. Looking at the revenue for the company, it's really impressive that they grew 10%. And the reason I say that is this is a very big company. They went from $116 billion in 3 quarters in 2022, and they grew to $127.7 billion in revenue. So that's big revenue growth. I thought that was really impressive. Very happy with the top line growth. They grew their revenue and they are also profitable, which is very good. Their net income was 5.1 billion. The one thing I would point out is their net income did not grow in proportion with that top line. So it's good that they're growing their top line. That's great. They are growing their net income, which is also very good. It'd just be nice to see them pick up that profitability so that they can become more profitable and generate more free cash flow. Look at the balance sheet for Elevance Health. The cash grew from 7.3 billion a year ago to 10.9, a nice bump. Debt did grow from 22.3 plus 1.5, so that ends up being about 24 billion, up to about 25.2 billion, because you add 24.05 billion plus this $799 million. So just a slight rise in debt and a rise in cash. Overall, Elevance Health has a strong balance sheet. If you compare debt to EBITDA, it's well below 3. So I have no concerns about the balance sheet. Get the statement of cash flows, which is the primary financial statement that drives my valuation for a company. And the cash from operations went up. Last year, they generated $9.9 billion from cash from operations, and it went up quite a bit to $11 billion. So it's a great $1 billion increase in cash from operations. And purchases of plant, property, and equipment stayed about the same. It went from $854 billion up to $970 million. I think I misquoted there. It's 854 million to $970 million. So overall, just a nice $1 billion increase in free cash flow from Elevance Health. I think that Elevance Health is currently discounted by 19%. I think that each share is really worth about $535 per share, but right now the market will sell you shares at $452 a share. Let me take you through the 2 different methods that I use to value Elevance Health. So first, I'm going to take free cash flows and I'm going to take 2022. I'm going to increase it by 10%, which is the run rate that they really have been executing on. If you look at their statement of free cash flows, that gives me a starting point of $7.9 billion. And I'm going to grow the cash flows in years 2, 3, and 4 by 7%, which I think is conservative enough, yet realistic as well. The company has been consistently growing free cash flows, which is excellent. After those years, I'm going to grow by 3%, which will set up the terminal value of those free cash flows. I'm going to use a discount rate of 8.5. This is a high quality company, but boy, those interest rates keep rising. So the weighted average cost of capital is also going to rise, making the valuation of stocks a little lower. So those are the factors that go into valuing this particular stock using the cash flow method. The terminal value, which is all cash flows beyond year 4, are 182 billion. And the addition of that, along with the cash flows I expect in the first 4 years, discounted to a net present value using a discount rate of 8.5%, amounts to $150 billion. That's the value of those free cash flows in Elevance Health. I'm going to add the cash that they have on the balance sheet, but take away the debt. That way it leaves me with an equity value of the company. And that equity value is $136.4 billion. The market cap is currently at 106 billion. And therefore it leaves about a 29% discount on Elevance Health using the free cash flow method and valuing the company strictly on free cash flows. I like to look at two methods, and the second method that I'm going to use is earnings per share. The earnings per share value is a different way of valuing the company. It's based on their earnings per share, their profitability. And the guidance that they have provided is that they're going to pay $33 for the full year. So I'm going to use that as the starting point for earnings per share. I'm going to have a PE of 18 and use an expected growth rate of 3%. The earnings per share valuation formula that I use is right here. It is the most typical one that I've seen on YouTube, and that's the one that I've chosen. And based on that formula and these factors, I get to a per share value of $444, just a little below their current stock price of $451. So based on earnings per share, the company is fairly priced, just really at a 2% premium. So when I factor these two numbers together, I get to 19% because I take a higher weight of free cash flows. I take 2 parts free cash flow, 1 part earnings per share, and I get to a 19% discount on Elevance Health. The debt to EBITDA ratio is 1.19. So that's a very, very sound balance sheet. And what that means is that using their EBITDA for a little over a year, they could pay off all their debt if they just focus their EBITDA on paying off debt. So very strong balance sheet, very good free cash flow generating company in Elevance Health. Looking at where the stock price is traded over the last 5 years, you can see that over the last 2 years, the stock price really, if you bought at the beginning of 2022, you'd be even to this point. But if you had bought in the middle of 2020, you would have more than doubled your money in the stock. So it really had a big run over the course of 2 years, beginning in 2020. I have a value of the company at $535. So it offers up a nice little discount in the stock. The stock does pay a 1.35% dividend, and they do buy back shares. And the stock is down 10% year to date. So it's time to decide whether I should put my hard-earned money into Elevance Health in the form of additional shares, or if I should sell my shares at Elevance Health, or if I should just hold. The first question, I definitely really like the company and I like the industry. I have good, high growth companies. I own Meta as my biggest position. I also own some small tech companies, and I have a variety of, I think, more aggressive stocks. It's good to have a good healthcare stock in my portfolio. The management team is doing a great job at this company. Debt is well below 3 times EBITDA, but not enough of a discount is available. I like seeing a bigger discount because, frankly, a lot of things can go wrong in a stock, and I'd like to see a bigger discount available. So for now, I'm just going to hold my shares and see if either the company grows that much better, if interest rates fall. Just some factors need to change in order for my valuation to get more favorable toward Elevance Health. So that's my video on Elevance Health. It's a pretty timely video because I happen to have gotten a pretty strong cold a couple of days ago. So you may notice that I'm a little congested. So it's kind of funny that I'm doing a healthcare stock when I myself needed a little bit of healthcare over the last 2 days. I hope you enjoyed the video, and I'd love to hear comments from you on what you think of Elevance Health and what you think of the video. If you can do me a favor and like the video and also subscribe to the channel, I'd really appreciate that. And I hope you have a lot of success in investing in 2023.